Check, check. Let's find out if we're live. 3. Oopsie daisy. Nope, I don't want that. Hang with me, guys. I'm just making sure my audio is on. I've had a couple days where I have not had my audio on. I'm just making sure that this is working. All right, cool. Sweet. All right, here we go. Yo, so to start the stream, let's do this. So I'm already in a trade. You can see up here on the screen. We kind of took this short position early this morning, and we'll watch this play out. But what I wanted to do real quick was just kind of walk through a couple things with anybody who's watching this. Number one, my name's Travis Webster. If you're new to this stream, I have been trading to some capacity over the last 5 to 7 years. It's been the same adventure that most professional traders have gone through. And I'm trying to get this coffee set up. Come on. And I'm now just trading futures. So I trade strictly futures. I focus mostly on the Dow companies and the NASDAQ. Occasionally I trade oil if I see a big move that I know is going to happen. And that's where I tend to make the most of my money, alongside of a couple of traditional businesses that I run and manage. I've been a real estate broker for over 20 years. Sorry, I've been in real estate for over 20 years. I've been a broker for about 10 here in Central Florida. And I'm super passionate about making the right steps to build long-term wealth. I'm really passionate about taking something small and transitioning that into something that can work on your behalf. So with that said, I have been following tons of influencers on YouTube for most of my trading journey. And it's got to the point where I realize that most of them are out for something nefarious. Something, not nefarious, that's the wrong word. They are, they're using YouTube as a ploy to earn affiliate income and all that kind of stuff. I also use YouTube for affiliate income and for secondary and passive income. There's no other real reason to justify why you are on YouTube doing something like this except through that. However, what I found is the biggest transition line between honest and transparency in that is those who show their accounts every day, who show their trades every day, who show the negative balances and the positive balances, and actually walk you through the transparency of an account versus just cherry picking a trade and saying, hey, I made $10,000, I made $8,000, I made $20,000, or some Forex guys that are making hundreds of thousands of dollars in a single trade. I wouldn't trust that, and I don't trust that. So here is my challenge that I've set for myself to keep us all on the same page with this particular account. I have given myself 1 year to trade a prop firm. I've chosen Top Step as that proprietary firm, the capital firm, to get me off the ground. I'm going to use that prop firm investment, that one account, to roll over into live money, real withdrawals through an express funded account or a live account. We're going to deposit that money into a Chase account, and I will show those statements every month to you on the Chase Bank checking account. And then through that, we will work with a mortgage company, a broker, or hard money, and we will purchase some type of investment property, whether that's a flip, wholesale, a buy and hold, or just a single family resident that we can Airbnb. I don't know, but we're going to translate and convert basically $149 investment into a proprietary farm into a long-term wealth building real estate asset in less than 12 months. That's the goal. That's the challenge. That's the plan. I think that it's possible. Otherwise, I wouldn't have set the goal for myself. But I'm hoping that you come along for that journey. Regardless, that kind of gives you an idea of what's happening in this account. Like you said, like you can see on here, I'm already in a challenge. Yesterday was kind of tough. Hang on, let me get this coffee going because I'm beat. Yesterday's stuff, I'll recap what happened yesterday here after I get out of this trade, and I can move the charts around without paying attention to it. But if you're looking and you're new to this stream, on the left-hand side of the screen on TradingView, you're going to see this right here, like it's like right above me. This is a 1 hour, and I switch between a 1 hour or a daily or a weekly. This is my long time frame, longer range chart. So anything that I need to see that is going on, big picture market, I'm gonna have on this screen right here. In the middle, I have a 5-minute chart that stays. I never change my 5-minute. It basically is the Bible when it comes to my trading strategy. And then over here on the right-hand side, all the way across, is my 1-minute chart. I use the 1-minute chart to gauge and understand current momentum. So if you look through the charts, you start over here at the 1 minute. The 1-minute chart is going to be the emotion, the reaction, the psychology and trading behavior of what's happening on a particular symbol. You move to the 5-minute chart, and the 5-minute chart is going to basically, for me, help me find where my entries and my exits are going to be. So either I'm going to, usually my entries happen on a 5-minute chart based on momentum and based on what's happening in the long-term picture. So here up on the 1-minute chart, or on the 1 hour chart above us, normally in my day, I'll start setting up with this 1-minute chart or this 1 hour chart. I'll make sure that I understand clearly what's going on in the market, and I'll use that to determine where my trade is going to be. So I'm looking at the 1 hour or the daily to understand where my trading, my trade plan, I guess is the best way to say it. But basically, what am I looking for? Am I looking for longs? Am I looking for shorts today? What happened previously? The 1 hour chart up here is going to basically be my the predictive crystal ball on what I think is going to happen in the market. And then I will use my 5-minute chart to basically to look for my entries to reduce that risk and make sure that my risk and return is on point. And then when I'm entering, usually on the actual execution of the trade, I'm going to use the 1-minute chart to perform the execution, and usually to time out my exits if I start to see momentum curling. So I can go over in a little bit after I get out of this trade how I use the actual spaghetti models. And the spaghetti models are these lines that I've got set up. They're all SMAs. They're not exponential. They're all single, simple moving averages that correlate with each other across all time frames. And then the dotted line that you see on all three charts, that is going to be a VWAP line. And then to really kind of dial in everything, the thicker yellow line that you can see that is currently right here on the 1 minute, and down here, this is a 600 moving average. This is what I consider gravity. So if we get a divergence away from 600, I know that it's going to try and pull it back, right? So this is my personal divergence convergence line. When the spaghetti models and the SMA start to splay out, I know that eventually they're going to converge back and try and meet up or curl back down or up into that 600. So that's basically how I trade, the trading plan. Like I said, we're just in this to make small wins over the next 6 months in Top Steps Combine account. We're going to withdraw those funds, and we're going to try and purchase a house using every tool possible that I can show you on how to purchase a home, whether that's to buy and keep it for yourself if you're looking to purchase your first piece of real estate, or if you're at a point where you're like, hey, I'm ready to get into this flip game and the real estate game. This might be the way to do it. So we're going to use the funds in this account that we're using in Top Step, and we're going to try and purchase a house. And there's plenty of ways to do it. I mean, it's not a hard task, really. Purchasing a house is relatively easy. All of the work that you have to do leading up to that purchase to make sure that you're qualified, that you have the right deal in place, that you know what you're doing, and you have a strategy. It's all the same as what you do when you're investing in the markets. It's basically all of the same thing. You want to make sure that the deal is the correct deal. It's the right entry, so that when you exit that deal or you hold that deal, that you're not going to lose money. I mean, it's the same exact stuff. So if we can be diligent and steward this well, then you'll be able to be diligent and steward real estate well. And in my opinion, I'll say this until the end of time, real estate is the best long-term wealth building tool that exists on the planet. And you can argue with me until you are blue in the face and you will be wrong. That's just my personal opinion. And I know that because I have experienced it. And I'm hoping to pass some of that on to anybody that wants to watch. I mean, realistically. So just to be clear, I am a Top Step affiliate, so I'm a partner with them. I don't have any affiliate links on my page or something because I don't really know how all of that works. I don't know how you get paid out or what kind of links you need to click. I'm sure some point in time I'll take the time to figure that out. So right now, I've liked this downward movement here on this trade. I've got, like I said, we're sitting around $200. This is some weakness. I got a little bit of a break of structure. And this is on the 1 minute chart over here. This is a line that I'm going to wait and see. I don't really want this pullback here because we're now past the 7 a.m. mark. And as we're looking at 7 a.m., what I want for us to happen is we're targeting this 600 down here. So we're targeting this 600, which correlates over here. So if I bring my cursor up on the 1 hour, you can see this 600 at 37,710 is the same over here as this 600 at 37,710. That's where I want to be. So my game plan is that this is going to continue to fade into the morning, and then once U.S. retail traders wake up and come out of their sleep coma and get with making money, they're going to rally this thing back up like it did yesterday. Yesterday was a freaking fiasco. It was awesome. I was up $630, so $630 by 2 p.m. I think. Up $630 by 2 p.m. Live streaming yesterday, I think we were up, 250? No, 455. We were up 455 when it ended the live stream yesterday at around 10:30. Went out and did my business. I'm going to close this out probably. Oh, hang on. Went out about my day, did my business, did some stuff with the kids, came back, saw some good opportunities. Around 12:30, I took another trade. I'm going to close this out at $170 in profit. Took another trade around 12:30 for about $200, $300, and we ended up around $633. Walked away from the computer screen. Everything was great. Came back at about 2:33 p.m. and saw the massive squeeze that was happening. And if you were trading yesterday, you know exactly what I'm talking about. That squeeze was ridiculous, led by chips, led by just a bunch of stuff that was out there. I think basically the Fed was alluding to, so they were being pretty hawkish, and you had the chips running. NASDAQ just led the way. So let's check. I'll show you this. NASDAQ yesterday just ridiculous. Morning, real weak. But God, monster move. I missed this whole move on NASDAQ. I was on YM and oil yesterday morning. I saw this curl and this bullish move up down here early in the morning on NASDAQ, and I used that as an indicator for a reversal and a move up on YM on the Dow companies, and it happened. We got that move. So needless to say, we were crazy overextended on Dow. So on these futures right here, it was way up here. Let's move it on the 5 minute. So this is what happened yesterday. Right here, I caught this short leading into here. I caught this short, the touch is 600, and I caught this short down and closed below this line. Perfect. Walked away from that, super happy. Then I go out and I do all of the things that I need to get done, and this starts happening. Didn't even see any of this, right? Was gone, not even at my computer screen. Then I get back to my computer screen somewhere right here around 2 o'clock, and I see this kind of massive push up. Watched it, did not trade it at all, actually. continued, started to see this roll over and a break of structure. So I took actually no, I think it was right here on this 5-minute candle right here. I was thinking, okay, we're gonna start pushing through this. So I take this move with just one contract, and just it tore me to shreds. Actually, sorry, I took 2 trades yesterday. One was through this upper trend line. That's what caught me off guard. That's what got me out of my seat and started my loss rally. This right here, this move, this weak doge candle, and then this close below the trend line that we set, which is this long-term trend line that we've got. So we've been bouncing. We had this close right here underneath it, and I took a short position with one contract because it was pretty risky, and it pushed up through. I held here thinking, okay, this is eventually going to come back down. It's just doing kind of a fake pump, and then a ton of volume just happened instantaneously. It went through the roof. I got stopped out here for a $250 loss on that one contract, and thought to myself, okay, we're good. We're still sitting around $380. We're going to be done trading. And then like an idiot, I continued trading. I came up here, and this move, I thought this was our top right here at 345, and we were going to start sort of a 10-minute rigged, as Josh at the trading fraternity would say. And I was trying to get ahead of that, kind of be a little bit front running on it. Took a short again right here when it pushed through this moving average, thinking we're going to continue down, maybe retest here, and then figure out moving up and moving down. But I just wanted my $250 back. The next candle opens, and it's just massive volume. I get stopped out again, and that was the end of my day. Ended up $200, I think, and $50 red on the day, which isn't awful, but when you were up 630, it hurt my feelings. Hurt my feelings on that trade yesterday. So today, taking it slow. We're back in the green. Let's actually go and update the totals. We are back in the green, starting today at $151 on that last trade. So that's pretty good. So on the day we're at 151, and our totals, we are sitting at $13.98. All right, so we're back in the game. We're not as high as we should have been yesterday, so $13.98. Cool. If there's anything that you guys are interested in knowing about how I trade or how I set up, just let me know in the comments. I'm still learning how to interact with comments, but if you put something down there, that'll help out so that we can be. So it's a good thing I got out of that trade. We're starting to reverse back up on this, which is kind of what we thought. I mean, 7 to 7:30 is usually when you start seeing a lot of U.S. retail traders enter the market, and they're ridiculous. They're on crack, and they usually push the market into places that it shouldn't go. I'm on a little bit early actually today, so normally I'm trading sometime after 8. Sometimes even as late as 11 a.m. But on Tuesdays, I homeschool my kids. So on Tuesdays, I usually, about 9 a.m., we go to like a co-op homeschool group and hang out there, and that lasts quite a bit. I also do deliveries for my other company on Tuesdays and Fridays. So my Tuesdays usually get full like crazy. So I end up trading early. I'm normally up here at the desk at like 5, looking at trades, looking at setups, and then taking some kind of trade. Usually ends up being small when my winning days on Tuesdays end up being small because I don't have the runway and I'm trying to squeeze my trading day into a couple of hours. But for the most part, they end up being good. Tuesdays are always a good day for trading. I like this move on the 1 minute. The 1 minute chart is looking great. So we've got a nice little 1 minute move that's happening over here. This is kind of proving out that we're going to push back up and that there is still a lot of bullish momentum that's going to be built into this opening when the U.S. markets open up. This is kind of a confirmation. You had this kind of fade down through the Euro Open, which is kind of expected. I think their inflation numbers in Mexico, some of the inflation numbers are weak or stagnant. I think they're coming out. I mean, we can actually pull up. Let me pull up the economic calendar. So this morning we had 2 p.m. we had some France balance of trade, exports. Unemployment in Italy came out basically the same. So we had unemployment rate in Italy this morning at 4 a.m. It came out like 1 point or 0.1 below what was expected or the last reading. And then we've got the unemployment rate in the EU was even. Inflation rate in Mexico was basically, actually that was up. So up month over month, or up year over year, and up month over month. So that might be a factor in today as we go into U.S. market opens. When we start looking at the balance of trade in the U.S., that's going to happen at 8:30, and you're going to get imports, exports. 10 p.m. we're going to see Fed bars at 12, economic optimism index. I have no idea what that even is. Fed bar, he's going to push the market. That's going to be at 12 o'clock, so we're going to watch out for that. Then you got some other people speaking from EU at 12:30. Crude oil, that's going to move the market. That's going to be at 4:30 p.m. after the bell. And then 6 p.m. Korea. So yeah, so, I mean, it's pretty low. Australia CPI, that might be something interesting to watch this evening. And then tomorrow we're going to get basically a dead day. Nothing going on tomorrow. Everybody's eyes are waiting for. We're waiting for CPI on Thursday. Thursday CPI is what's really going to move the market, and that's basically what we're looking at. So anyway, that's the economic calendar. Let me show you real quick the Top Step account. It was a lot of downside for the 6 to 5. Yeah, I agree with that, Marius. And that's usually kind of what happens too. I think that right now we're going to see this upside move, and if you look at it, you can see. So what I'm normally doing on the downside. So you'll see, it's like clockwork in the morning. You'll see European traders, or you'll see a lot of like the London session futures traders push the market in one direction, and it's, I want to say low volume, but it definitely is a fade, either up or down. And then usually you'll see some kind of small reversal or a retest between 7 and 8:30 before news pops out. And once that news comes out or something gets changed, 8:30 freaks everybody out. It's like the shift change at a restaurant, right? So it's like mainly like London session has control of the market, and then you get this 8:30 strange shift change where news normally comes out, and the people sitting down in the restaurant are kind of like, where'd my server go? Everything is different. All of a sudden I was having great service, and now like no one's to be found because everybody's waiting for that news. And then after 8:30, you start to see kind of something settle into, you start to see a direction after the news pops out, or something happens going up into US market open. And then once you get that 9:30 push, everything could change. Then it's like the whole new shift takes over at 9:30, and they're like the wild crew. You know, they're the crew that wants to just, you know, totally mess with everything. Or you got retail traders deciding to squeeze the crap out of the market for whatever reason because some new tech AI thing came out, and it's you just have to wait it out. But right now, the name of the game is waiting. So I wanted this move down to the 600 moving average. So 37,710 or 700s is what I'm looking at on the YN. Let's see if that correlates with NASDAQ. So on the NASDAQ, so this is interesting. And this is why looking at all three of the indices are important when you're trading just one. You can go strictly off of price action. You can move specifically off of like what is happening on this chart, and you could probably do all right scalping. But like for instance, on NASDAQ right now, you have two things that could be happening. One is this is definitely on a 1 hour chart. This is a rollover and some serious weakness built in. It needs to come back up to to 750s right here, hit VWAP before it decides what it wants to do for the rest of the day. You could see some consolidation on this, but if you go back over to the Dow companies, and on the Dow companies, you kind of see the same story. You see this kind of rollover on the 1 hour. The difference between Dow companies is that you've got this heavy yesterday support level coupled with this resistance of the midterm moving average, this red spaghetti line that's crossing over into an upward direction. So you've got some bullish momentum building in here on the Dow companies for the day. But on NASDAQ, you can see that all of that bullish momentum is way down here. So you've got room on the NASDAQ to free fall back down to this support line at the 580s before it catches up with these models down here, before it can push higher. So you've got room. There's a lot of risk here built in. So you could see this kind of V-shaped move. This has the opportunity right now to ping off of 720 and free fall back down this morning and give up a lot of gains that it had, at least half, and that'd be a 50% retracement almost somewhere in this area. By the time this 1 hour comes back down and meets this red moving average, you're going to see like a touch somewhere right around here at 600s on the NASDAQ, which would be about 50% of yesterday's move, which would make sense for that to retrace and then decide what it wants to do. On ES, it's probably the same picture as NASDAQ. Same thing. So on the S&Ps, you've got this crossover that's about to happen. This is crazy weak. I don't like this. This is a pretty, this is a guaranteed cross on a 1 hour. That's going to move down. And then you've got about 100 points here. So from where we are currently, so 780s all the way down here to 750. So you got about a 40 point spread that you could go between where it could touch up here and down here. So this is a lot of risk. This is risky to me. This still says short, but then you've got this over here with the 1 minute that's showing a pretty bullish momentum right now. So right now, buyers have the control of this thing. The bulls have this thing, and they're trying to push it back up. It's just, can they get it back up here above 785? Yeah, if they can get it back up here above 785s and push in this direction, that's going to be a break of this resistance. We're going to push up here. We're going to break and start retesting this for a move back up for the rest of the day. And we're just going to, and what's going to happen is that these moving averages down here are just going to play catch up, and there'll be a touch somewhere up here of these moves. That's one direction. But like I said, I prefer to let those lead the way here on YM. YM moves. The Dow companies, they move more predictable for me. Some people don't like trading because it's slow and it can be boring to watch it, and you don't get the same kind of price action that you do on ES. However, because of that, you can make a more informed decision. You can hold a little bit longer, and you can have a clear idea of where your target's going to be. So just like what's happening on ES and YM, you have this move right here on the 5-minute chart that is trying to figure out what it wants to do. You got this bullish momentum and a push back down. The difference is, and why you could see a rally at this point in time, and on the ES and YM, or ES and NASDAQ, you're going to see that the moving average just catch up to a pretty steep rally. Is if this stays or maintains here, there's less downside risk on YM here in this area. So you've got less of a move. This could come down and touch this way before ES or NASDAQ catch up. So before either of those charts see some kind of move, you could see the Dow companies start taking up and pushing the market in a direction this morning. Whereas yesterday NASDAQ led the way. This could be the collective market kind of pulling it down. Now, maybe this is news. Maybe this is just stagnant inflation numbers, nothing happening the way we want it to. But it's very possible that we see a touch somewhere here in the next 30 minutes to an hour. So sometime before 8:30, we're going to see a touch down here in the 700s, or just a consolidation and let this moving average catch up. So unless I start seeing some momentum, we get a break of structure. If I get a break of structure here at 747 on the Dow. So this is YM on the future. So if I get a break of structure here, I'm going to look for a short down to 714 and just take another small, well executed trade. But what I would need to see is this continue on the 5 minute. These spaghetti models continue to form a nice downward stack, and I would need to see for on the 1 minute over here for this to be clearly reversing. So I would need for this price action to stay below these moving averages and move its way down. You guys all trade. So Marius, do you trade futures? Are you in the equities market? Are you trading options? Curious to know. So I'm trading early actually today. There's a couple things that I've got to run and do here at 8:45. So I'm not going to be on this stream very long, but I still wanted to do the stream and take advantage of the market a little bit. $151 isn't that wow of a trade. And to be honest, if you are following along or hanging out, I don't trade big, huge home run moves like a Patrick Wieland, going all in on some contracts. I've watched Patrick for a long time, and I love how he trades, and his energy is epic. I do not know how he makes that consistent. I mean, I know his strategy. He's got a very clear, a very simple way of trading, and he does it consistently, and it's on point. How he stays consistent and shows those profits is beyond me. So I'm trading in the same, used to. I think he's moved on to some other ventures this year. But I trade the same Top Step combines. So the same $150,000 account, the same minimum, maximum stops on your account. And I trade 2 contracts at a time. I've back tested on Top Step 20, 30 Top Step accounts, trying to trade in the same manner that Patrick trades. And I blow those accounts in a week. I do not know how you maintain 15 contract trades. That's all of 25 seconds, and you hit your max daily loss. So I don't know if he's worked out the math on. I imagine that he's probably worked out the math on the trading combines and just done the factor of knowing my risk and my total profit on a couple of really huge days covers the amount of accounts that won't make it to a live or won't make it to an XFA. I imagine that he's probably run those numbers very clearly and has figured out that his profits on those huge winning days in a live account or an XFA account can more than cover the risk associated with taking 15 contracts, knowing that at least 15-20% of those contracts are going to roll into a funded account and make money that will generate more money to continue trading on that path. So he's probably worked it out, which would be awesome. I mean, I'm that, like, everybody has their strategy. That the name of the game with the market is to soak money, remove money from this market, right? My job every day is to wake up, look at the charts, and take money from. I don't want to give money to this market. I want to remove money from it every single day. It doesn't matter if that's 1 penny. I want to make sure at the end of the day, I'm removing money, I'm putting it in my bank account, and I'm going and taking that and putting it into something long-term like real estate. And if you follow Stock Market Live, Josh over there, man, he'll tell you the same thing. Get a long-term, get a long-term. Preaches that, man, because this is a vehicle to produce income. Day trading is a vehicle to produce income. It is not going to provide long-term wealth. It is not going to provide a career path that is stable for you or your family. You'll be able to earn income, but just like in real estate, just like in sales, just like in any other self-motivated career path, it's feast or famine. Your strategy could be super hot. Like for instance, all through December when the market was going straight up, there were people all over the place making tons of money on that market. I couldn't make money on that rally to save my life. I was just even loss. And sorry, a lot of that was just because my strategy doesn't allow me to trust a move that's very extended. I'm always looking for a reversal once we get that massive divergence. And all through December, that divergence just kept getting wider. And for me, I'm looking for reversals on that because it's just there's no way this can continue to go up. So I'm looking for that pullback down. And even though my strategy is dialed in, I mean, this thing makes money. There's no doubt about that. I know that we make money. In my live accounts, they thrive. There are periods of time when any strategy is going to give you false readings, false signals, or you're just not going to trust it. So, in my opinion, day trading is strictly for earning income. That's it. If you're, and that's the idea with this 1 year challenge, right? So this 1 year challenge is to show that we can take $150 and make a decent livable wage using this tool, using this vehicle, using futures, and that living wage we can then use and be smart with it and move it into long-term wealth, whether that is long-term equities that you want to hold, whether that is real estate, whether that's some kind of ETF or CFD that you want to trade that is you can hold for a longer term. There's all kinds of long-term wealth building vehicles that will make you wealthy in life. And not only that, when you start holding long-term, here's why people preach long-term versus short-term, right? When we get into the point of this 1 year challenge, when we're done trading actively and we're looking more in the real estate side, how do we purchase a house? When you have long-term assets, right? When you're holding actual stock papers, when you're actually, have a tangible asset like that and you're not just in and out trading, you can use that to leverage your income and build wealth outside of the market, right? So it becomes a financial tool for you outside of the stock market, and those are strategies that we'll get to. Once we start looking at buying houses and doing all that stuff, there's all of that's going to kind of come along with it. However, right now our focus is just trying to make some money. So $151 on the day. We're green 151. We're up 1398 on the day. This is a Top Step trading combine. So currently, in this challenge that we're doing for 1 year, I'm gonna pull this all the way up here. This is account number 398, and this currently is a Top Step trading combine. We are not in an XFA or a live funded account at this stage in this 1 year challenge. We need to earn 9,000. We're currently at 1398. Once we earn 9,000, we'll switch over to an XFA, and that account is going to earn us money. When we get that money that we earn on the Express Funded account, we're going to put that into a Chase bank account, a checking account through Chase. I have that already set up, and I will show that every month, a monthly P&L, a monthly balance sheet on that Chase account as we get money that comes from the Top Step live into that account. And then once we have money in that account, we're going to use those funds to go buy a house. It's that simple. But right now we are currently in the account number 398. Every day I want to show that we're still using this account 398. While I'm waiting for another trade setup, because this is still kind of teetering here, let me go over to my actual Top Step dashboard. If you're watching this stream, in the comments, like if you could just tell me if you are trading live money or if you're trading a prop firm, and if so, where are you trading? Are you trading with my futures, my funded FX? Are you trading with some of the new ones? Are you using Top Step? If you're trading a prop firm, if not, if you're trading equities or you're in an actual live account, a funded account that you have, just let me know so that I can understand where where everybody else is trading. I can cater the stream a little bit towards other stuff besides futures. I just focus on futures. Sorry, I'm gonna switch over here. Let me switch over real quick to this browser view. Sorry about I'm still trying to sort out OBS, all these graphics. So I'm trying to get all these graphics moved and in place. It's just I don't have the time of day to sit here and mess around with this every single day. I'm trying to make the stream as cool as possible. So this is yesterday. You can see the same thing. This is account Top Step. This is a account number 398. So this is a trading combine account. It's not a live funded account at this point in time. If you're not familiar with Top Step's rules, basically in a $150,000 combine account, you have to use that leverage to achieve $9,000 as a profit target. You don't have any time restrictions, so we can take 30 days, we can take a month, we can do this in 5 days, and people do it in, I think, 2 now. I think you can do it in 2 or 3. This consistency target is what kills most traders. So you can have a really great day. And this in the beginning when I was doing Top Step, this is one of the things that really kind of this hurt me a lot more than I thought. I used to trade the futures and trade and hold. So I used to hold my trades a lot longer, especially when I knew that we were in a big rally. And I'd be pulling down, $3,000, $4,000, $5,000, sometimes more on a single trade because I would let it go for 3 hours, 4 hours, and let that just ride out. Top Step is better. They've got a 50% basically total trade profits. So your single day cannot be more than 50% of the total profits you make in the combine. So every day, so if my profit target is $9,000, I cannot make more than $4,500 in a single day of trading. Otherwise, this profit target will bump up to basically split it in half. So the profit target bar will move if I make more than 50% of that target in one single day. So it used to be less. I think it used to be like 30% or something like that. And I would, it was like, if you made over $2,500, your profit target would move. So this is good. It's fine. I've learned to deal with it. This one should not be an issue for anybody. When I back test a lot, I blow through this so easy in futures. If you're taking anything over 5 contracts, 6 contracts, and Top Step will allow you to take, I think, up to 14, 15, or 16 contracts in this account, in this $150,000 account. But this is really easy to blow through if you're taking more than 5 or 6 contracts. The reason, and here's someone in the stream yesterday asked why I only take 2 contracts. So if we come back to my trades, so I made $151 this morning, right? So that was on 2 contracts on a little short move. Usually when I'm trading my personal accounts, I'm going to trade between 4 and 6 contracts. So I usually take a 5 contract move and let it ride, which means that this would be somewhere around $300 or $400, which I'd be happy with that move. The reason why I trade 2 contracts on this particular account and don't trade anything more than that is because Top Step, when you move or you graduate from the combine account, you're going to go into the express funded account. When you go to the express funded account, they are going to limit you, and I forgot the terminology that they use, but basically it's a scaling plan that they put you in. So there were times when I was trading 14 contracts, 15 contracts in the overnight sessions because I could catch a huge move and made $5,000-$6,000. When you get into the express funded account and you get your actual live account where you can earn money on, you cannot trade more than 3 contracts at a time until you make, I think, $1,200 or $1,500. Then it moves up to 4 or 5 contracts at a time, and then I think once you pass like $4,000 or $5,000, you can trade. You can go full risk. I think it's something like that. But essentially, when you move over, your strategy is going to be 2 contracts max, 3 contracts full capacity, right? And so starting right now and trading 2 contracts at a time is going to keep our strategy dialed in and consistent, so that when we get our express funded account, we will still do 2 contracts and know how much money. We'll know every day we can make $400. Every day we can make $600 on 2 contracts, and that's it. As we scale into our XFA account, we can add on more contracts and go a little bit higher risk with those contracts. And that's where we'll start to see our actual live account and our deposits into the Chase bank account will start getting exponentially greater. So we'll go from making $200, $300, $400 a day in a live funded account to putting on more size a month in. And by July, we could be trading 5 contracts, 6 contracts at a time and pulling in $1,000, $2,000 a day consistently with bigger size, knowing that our strategy is still working. And the guys at Top Step, man, people knock on this thing where you have to do the scaling plan. And the guys at Top Step, they've got it dialed in. Actually, so real quick before, the reason why I came onto the screen. So this is the trading days. We've been doing this combine for, 4 days now? So today's day 5 on this combine of this challenge. And you can see you're slowly building this thing up. And we're trying to hit this line up here. That's our $9,000 in profit, and we don't want to get near these things at all. Yesterday we closed out at 151. $4.99 with a $250 profit. So that was 2 days ago. So we did 631 the first day, 613 the second day, 254 the following day, and then yesterday we gave the 254 back in a red day, which was stupid. I just went over that earlier. And so today we're looking for at least 250, if not more, just to kind of start that move back up. I don't want to trade and revenge trade into this thing, but that's sort of where we are. Metrics are what they are. We're way too young in this account to even pay attention to this, but that's pretty good. We're still sitting here at like half of a losing trade, so I'm happy with that. All right, so let's get back to Trading View and actually see if we can take a trade. Yeah, I just saw that too. I just got a notification on NVIDIA. You're right about that, Marius. I think we're going to get another chip rally for sure. I think I think AI tech and all of the big companies that are kind of in that space are going to pull this market back up. So anyway, let's get back over here to Trading View, see if there's a trade to take. 7:41 a.m. We're still stuck here. Not much volume. The MACDs are still awful looking. So on a 1 minute, we're getting a rollover. Where's dollar at? Yeah, dollars moving up. So strength here in DXY is gonna either slow things down, make it stale or hard to trade, or we're gonna see a little bit more of a downward, reclaiming some of that move that we had yesterday. So this is a little bit of a bearish signal here on the futures. Is NASDAQ rocketing? So see, this is the ping. This is what I was talking about. We're still touching this. We're following this trend line now. So even though we're going to start seeing that rally, that might not happen till 10, 11 a.m. or after market opens when big money comes back in. But right now we're still operating as pretty low volume, and it's kind of still following the divergence pattern that's happening in a downward trend. So we still have a lot of risk here, and taking any kind of move at this point in time just wouldn't be smart. And we're about to get a crossover of the 600. We're about to get a crossover here over this. I think this is yesterday's. Yeah, so this is 1, 2, 3. This is a big support level here. Moving average is coming up above this. It's going to be very bullish for the market on NASDAQ. So we might be looking at a bullish overall day, but right now there's still a lot of risk. We can still fall 20, 30 points on NASDAQ. ES is probably the exact same. Breaking through a little bit on NASDAQ, not really kind of respecting these lines, but you still have this midterm moving average. It's got a pretty clear divergence and no weakness yet. There's that bullish momentum that's built into the 1 minute and the bullish momentum that's built into the 1 hour chart. I'm gonna take a look. Let's blow this out a little bit. Let me come back out to Dow companies. We're gonna look at the 1 hour on a larger. Let me see this real quick. So let's actually blow this screen up. This is a 1 hour chart on the YM. Yesterday we had that big dip in the morning. I'm gonna delete all these lines. So yesterday we had that big dip in the morning because I think of the Boeing news, and then moving into, then all of a sudden, it's like NASDAQ, which are ripping. And it was like at the very end of the day, all of the rest of the markets decided, wait, we're supposed to go up, and they just face melted everybody, including myself. Here is the long-term trend. So here's what we're following. This is what's letting us understand what's going on over the next couple of days. So this is the last part of that massive rally. This is mid-December in this part of the chart over here. I believe this was the last FMOA, like FMOC, FOMC, Fed minutes chair. I don't know. This was the last release of those minutes back in December, I think, where this might have been that big PPI CPI move that crashed everything, and then that just nonstop bull rally. So you got this massive bull trend that was all through the new year, and then this right here is what has been guiding our entire move over the last 6 days. Is this new channel that started to form. We saw this breakout, and it has just been religious in touching this downward trend until yesterday. So we have day one on the downtrend, a touch, right? And then a retest pre-market, a touch again, and then no retest, waterfalled off, another touch. Every single day we've either touched the upper band of this trend or the lower. And then 2 days ago we had this one, which was like the wicked up and down move. So that was fun to trade. But then yesterday is what changed the trajectory. And I've been talking about this in the last 3 streams, which is we have a market right now that has been obviously in a downtrend. It needed to cool off. It really did need to cool off after that December rally. However, this move is the first day that it did not touch this lower trend line. And I had been saying for the last 3 or 4 days after looking at this channel is that this on the Dow, this move right here to the 400s, this support line correlating over here with the last big level of support, this was something that the market needed to touch. It had to test this line. And when we did that, that was supposed to happen sometime Wednesday, Thursday, Friday, right? So Wednesday right here, we were looking at this and it was going to just kind of settle down, and sometime Wednesday, Thursday, Friday, it was going to touch with a target zone or a drop dead on this prediction here on the following day. So this is going to be Monday, a Monday drop dead day on this zone before it decided what it wanted to do. Yesterday changed everything. So what I was saying when I was drawing this zone, I think this was like 2 or 3 days ago when we put this marker down here as a place where this market needed to go, was that one of 2 things are going to happen. One, this is going to continue this downward trend, touch this, and then decide to either move all the way back up and test this all-time high, right? We're going to retest this sometime next month or the end of January. We're going to look at this zone for a retest of the upper highs and then a move through or a consolidation. The second basic idea we had with this on a long-term level is if this move did not come back down and touch this support and create a double bottom on this particular consolidation area, then you are going to see a wedge forming, which this is going to tell us, hey, we might be entering into a very long-term consolidation zone. So if this does not actually come back down and touch this and either start its move back up or press down and create a new low, this could end up being a 1 month, 2 month, first whole quarter wedge is going to continue to consolidate and get tighter and tighter and tighter in this range. So we will actually, let me draw that up here and keep that on our chart. So we've got an upper level here and this lower level here. Because we are in an election year, so we're going to start seeing campaigning, and there's no way that the Biden administration or Powell, or in an election year, there's no way during a transition of power that the incumbent whatever power is going to want to see this thing free fall. If they see it free fall, that is going to be just fuel for the opposing party. They also would like to see it go up, but pushing it all the way up or higher creates more risk if they stay in office. So if the incumbent party stays in office and they go, see, the stock market and everything is going up, everything's happy, the economy is great, and then come January when they have to start their new term, all of a sudden now you're crazy overextended and you create the risk of a free fall or a reversal or a retest and reclaiming some of that during your first year. They also don't want that. So this is probably the most likely scenario where we're going to end up having a massive consolidation range. Could last 6 months. I mean, as long as we don't get really bad economic news, inflation stays in line, we could end up with all the way through summer staying in this zone and consolidating. That's a high likelihood. I mean, we're looking, so this is an even longer trend. So I'll show you this line that was drawn way long ago. This was the current channel that I had drawn, and this was on a daily chart. If we go way back, this goes back, I think, a couple years when I draw this channel. So what we could see is when we broke out this last year, we had that massive rally. It just kept going up. We are here now at a point where this could, like I just said, consolidate, not even retest or touch either of these tops or bottoms, and just consolidate all the way through here, and looking for a crossover on this channel would be all the way in. See, that's December, February. It's not even letting me go out that far. This is gonna be like July, February, March, April, May. So May, June, finding some kind of action here and crossing back down into this long-term channel and continuing the long-term trend up, or flushing at this point in time. So anyway, that's looking at the little bit of long-term outlook. That's what's driving these trades. Is just watching these trend lines, watching these channels. Anybody that tells you that trading in accordance to trend lines is ridiculous is, they're lying to you. They're trying to make money off of you, because I'm telling you right now, for the last 1, 2, 3, 4, 5, so last 3 months straight, this market has respected trend lines. And so today is the first day we're seeing a new break of structure, and we're going to kind of sort out what's happening. Yesterday took us for a ride. So let's go back to the 5 minute and see if we can take another trade before I got to bail here. 8 o'clock's about to happen. I got 1 hour. Stretch this out a little bit more. So we're still moving up. That's interesting. So we got a little bit more of a break of structure here. This is bullish. We're looking up here at a retest of VWAP, and this is actually looking pretty good. So here's a clear picture of the strategy that I use in the 1 minute. I don't use the 1 minute to guide this strategy, but this is clearly what happens. And when I have the spaghetti model set up, I have them set up for a specific reason, because it provides, it shows weakness and strength and momentum. It's basically my own version of a Bollinger Band oscillator or something like that. Just it's more dynamic ranges for me. When price action crosses over or consolidates, the bands get tighter, right? And you get these crossover moves. This shows weakness. What you're looking for is the longer term moving averages to catch up or touch with price action during a consolidation. So you'll get a period of consolidation, you'll get a touch. Usually at this point in time is when the new bracket structure and a move down is going to happen, or you're going to see a touch and a push up to create a new leg. It almost always happens in this particular strategy that I have. The problem is, and when you trade this, is if you try and trade with big size on this strategy, it will kick your butt, because you do have to mitigate loss and look at all the time frames, and you have to cut your losses, because what can happen as like here on the 5 minute, right? I could say we've got a couple tops here, we're going to move back down. In this particular situation on the 5 minute, I can take this trade as a short, which looks like what it's trying to do, but I got dynamic resistance here at 784s. But I also have room up here to VWAP at 826. So my risk to reward right now is about 50-50. I don't like that move. What I do want to see is this to come back down, retouch here, and a crossover happen on the 5 minute chart. That reduces my loss. That way I know if price action drops below down here into the dark side, I'm out. I cut my loss real fast. That's a breaker structure. It's weakness, and I end up losing $100. You can get caught up in this strategy trading between bands, and there's too many support and resistance here to make sense of it. You really do need for everything to be stacked to give you a clear signal to be able to put on full risk or full size. I think we're going to consolidate through 8:30. There's no real news today. I think yesterday's news is the news. I think that the chip manufacturer news and a lot of the technology stocks are what's going to continue to drive this market today. I think probably NASDAQ might be the play today. But again, I would take this. This is looking bullish. But on the 1 hour, you've got this crossover about to happen. So you've got VWAP crossing under and another crossover on the SMAs. That's not good. That's not a good sign. And you've got all this room to free fall back to this heavy support on NASDAQ around 685 with a support at 681 or 581. I'll put a pin here just so we know for the future, but basically we have all of this room down here. This is where the market is going to want to go. So like I said before, 600 moving average is the gravity line. So this yellow thick line that I've drawn, the thicker yellow line is gravity. And on NASDAQ on the 5 minute, it's way down here. So it looks bullish now. And this is where you get your pump fake here in 3 minutes. This is a bullish move. You end up getting consolidation. People pile into the market. You're seeing some buying pressure. They let retail traders stack up, take as much of this as they can, and then they just start selling off, and boom, comes all the way back down to here. The move happens, and they consolidate here for the reversal back up for the rest of the day. Manipulation, consolidation, like in distribution, right? I mean, that's what happens. So that's NASDAQ. ES is probably telling the same story. ES is telling the same story. Yeah, with an even bigger fall. So there's a lot more of a short side move here. This is actually looking like a pretty decent short. What I need for this short position to set up on ES is I need for price action to come up here, get closer with VWAP. I don't want this much of a distance on the 1 hour. So I need the price action to come up here for these moving averages of VWAP to come back down and get a little bit closer, consolidate a little bit longer, and then the move down. These are still looking good. You got a short here. I need for 1 minute to kind of roll over a little bit farther, cross over, show weakness, and break structure here around 780s. But on the 5 minute chart, this is a pretty good short. actually. I'm worried that if I take this short, we're gonna just get a random push up here in 30 seconds back up to VWAP. So we'll see what happens here. We got 45 seconds before 8 a.m. 45 seconds, 30 seconds. We might see a little bit of buy pressure come up here before, and then a sharp move back down. So we'll see. But this is setting up to be a pretty sweet. This is setting up to be a pretty sweet trade. Let's check out NQ. This has a little bit farther to go, but this is looking more bullish. I'll watch NQ. I like NQ better. I like this chart better. This is telling me a better story. YM. We got 5 seconds before it crashed. YM is wanting to fall. ES. 8 o'clock. Let's see what happens with this new hour. So on VWAP on the 1 hour, you got a leveling out, which is going to start flatlining and creating a consolidation. So we might see a continuation move up. You got this kind of consolidation happening here, and VWAP isn't wanting to continue down. So you've got this kind of heavy consolidation and two bullish signals coming up here. Both MACDs are wanting to move up here on the short-term charts. So taking that short is not going to be very smart. I'd say not very smart. According to my strategy, taking a short position right now would be high risk. That is what I am saying. Although there's the move. What do we got? 5 points, 10 points. I might take it anyway. Golly, I knew it. I'm gonna watch it. I'm gonna watch this happen. I'm not gonna jump in. I'm gonna hold it. I'm not gonna jump in. Although that was the move, right? Gosh. So this could start right now our continuation downward trend down to, on the NASDAQ, we're looking at a possible 590 with a low of 580s, and touching this 600 moving average seems like the most likely scenario this morning for NASDAQ. If it does come down here and touch anywhere near where these two lines on the 1 hour chart are converging, so you're getting a crossover here of the 600 and that support. This bullish momentum on the 1 hour tells me that when it comes down and touches these things, I think that because of yesterday's news and the chip manufacturer news, that we're going to continue the move upward, at least for a retest and a consolidation again today around 780. That would be a 50% retracement. So if we came down here, yesterday's move, what we have here. So the range on yesterday was 373. A more solid bodied range was 418s, 420s. And then we had that massive move up here. So we're talking about a 400 point kind of spread on that day. If today's day comes back down, we would retrace to the 600s, somewhere around here, 615, possibly 580. And that would be about 50%. If you're like a Fibonacci trader, Fibonacci guy, you do something like that. This is that would be a range where you would start to see a target, and then you would look for a reversal. On my strategy, what I would tend to do right now is to follow this 5-minute chart and set my stops here at this midterm moving average. This is just so you guys know, this is how I have it set up. So this is a 50 moving average, simple moving average. This isn't like an exponential or anything like that. This is a 50 moving average with a smooth moving average that follows it at 35. And that's what creates these two lines and creates the crossover for me. Usually on NASDAQ and on YM. So over here on YM, which is the Dow companies, you can see that on both on NASDAQ and YM, this 50 moving average is a pretty good indicator of what's about to happen next. And you can see the consolidation and the push through. I didn't take that short, and on the YM it makes a little bit more sense when you look at it, because you have this cross up above it, which means that we could have continued to VWAP. So I didn't actually take that short. I could have taken it right here. I didn't really like this trade. Going into 8 a.m. and before 8:30, things get real weird around 8:30. So unless it's really clear here, like my trade, here's my trade is going to be. Today the trade is a touch or a bounce off of the 600 moving average on both the NASDAQ or YM, and playing a long back up to retest the highs. That would be the play. That would be at what a confident trade today. So if I see it be by 8:30 we touch this, we might take a trade, but I've got to bail. So I've got 8:30, 8:45. I got to be off stream by 8:45 to take my kids to our homeschool co-op. So I actually won't be around, but I'll try and get back on this afternoon around power hour. Profit today is 151. I'd like to end up today at least getting our $250 back that we lost yesterday. That was frustrating. If you're watching the stream late, so if I keep these up, I post all the timestamps. Most of this is like boring strategy work, so if you're into that, I'll continue to kind of share that. But for the most part, if you watch the streams later, I will earmark or timestamp them so that you can see when I execute trades. You can jump around from there. Otherwise, trading's boring, man. And if you're watching the stream, you know, a lot of it is just watching the charts. I don't see any kind of real solid setup here. We could have made our money back here. That would have been about $100 profit. That would have been a nice little trade, but I didn't like the risk. We were up here, and I just didn't want to take it. Although it's setting up on the 1 hour to be a pretty solid downtrend. I'd be interested to see if we get back into this channel. I'd be really curious. If we push past the 600 moving average on the 1 hour chart and we get back into this zone on the 1 hour, that would be interesting. Then at that point in time, consolidation is a very high factor. Or yesterday was just an anomaly. One of those two things. But CPI is going to move it. What I wanted to see happen was a touch and a retest over here. So on the 1 hour chart, if we move this back out, this would correlate with CPI. So I was just talking about this on our 1 hour. This yesterday was freakish. It broke out and did exactly what I did not want it to do, which was get outside of this channel. What I was expecting for it to do is to consolidate or continue its downtrend and touch this heavy support on Thursday for CPI. So on Wednesday, tomorrow, a test or retouch of this massive support level would be very helpful in a reversal. So we'd come back down here, consolidate, test, and then on Thursday, get CPI and see the market decide what it's going to do for the rest of the year, which was move back up for a retest here or start a downtrend. But this right here created a new higher low. So if we draw this line here and we change the color to like a yellow, you've got the low, the support, heavy support in the zone, and then you've got this new lower low, which correlates with this higher low, and which could tell us we're going to start basically following these levels and consolidating into this zone, which would suck. But yeah, I mean, my hope was that we were going to come down here, touch this for CPI, and then push. Now it's looking more like we're going to consolidate, and now we're sitting here exactly in the middle of this range, this zone, and CPI could be a touch here or a touch here at this point in time. So now everything is undecisive, which is going to influence all of our trades, because now there is no clear channel. At least when we were trading the last 3 days, whether it was a long or a short, we knew that it was kind of following this downward trend. Now we've broken out of that, and there's no real way to say or to tell what's going on. The only other thing would be to move this line, and we're going to start creating a really steep upward channel here, but I don't want to draw that yet because it's still way too early to tell. We'll know by the end of today where we're gonna be. I have got to go soon. I'm gonna probably take a scalp just to get some money on the table because the rest of my day is full and I'm not going to be able to trade, and I know there's going to be a monster move and I'm going to be upset about it. So what I want to do is at least walk away from this live stream with over $250 to reclaim, but this is just a choppy mess right now and I don't feel confident. So I'm actually not going to trade, probably not going to trade at this point in time. I'm going to have to wait it out. Man, do you guys know any, does anybody know any non-copyright, chill, lounge, lo-fi kind of music? Usually when I trade and I'm sitting here, I've got some really sweet lo-fi music playing in the background just to keep me entertained and, active. But on stream, I get a copyright ping or something like that, and I don't, I trade better, I flow better when I've got something operating in the background, some kind of music to carry me through the day. But right now, when you're streaming, the YouTube algorithm will find it and they'll ping you. So either I got to wear headphones, and I don't like wearing headphones, or I can have music streaming. I just got to find some copyright-free chill music. So if you know anybody that has chill, ambient, some kind of, non-aggressive thing, or some 80s synth, I'll take that, that is copyright-free or is happy to allow me to listen to their music with a license, let me know so that I can have that going on in the background and we can all be a little bit happier listening to this stream. I need to go say hi to my wife. She's definitely up. It's 8 o'clock in the morning. I bet she's out milking the cows right now. That would be my bet. Usually, so Mondays, Wednesdays, and Fridays, I'm out there milking Frida, our dairy cow, milking her with my wife at this point in time. And then we hop on stream here in a little bit after we get our farm chores done. This is interesting. So here we go on the 5 minute. So we're starting to see a little break of structure. We are creating a new low, a higher low, which is going to kind of challenge this downward momentum on the Dow. This might be a trading opportunity here. So we got a crossover on the 1 minute. We're starting to look like we've got some upward pressure and going to start a new channel. I'm going to draw a line here just to kind of see if we can maintain this for a little bit. That would be good. This will at least give me some kind of risk loss and also show, looks like we're gonna have a crossover on the 5 minute. So I wanna see this, we might get some consolidation and a bounce. That's what I'm gonna start looking for now for a long position. Back up here to VWAP, which would kind of correlate with a retest or a retouch on the 1 hour. I'll move this out. So on the 1 hour chart, you can see we've got some bearish pressure here, a crossover. We're under VWAP, and what I'm looking for is you've got this sort of move. I'm looking for some kind of touch or retest here. I bet let's check out what Nasdaq's doing because there's probably a better play right now on Nasdaq. Same thing. So if you trade Nasdaq, same thing's happening. You got a lot of bearish pressure on the 1 hour, falling down here below VWAP, and then that's just confirmation here with this touch and reversal. So what we're going to wait for on Nasdaq is this possible consolidation between these two dynamic ranges. So you've got a midterm moving average range, and then you've got the short-term moving average range. Short-term is one to cross over on a 5-minute chart. And you got this midterm right here that's looking to kind of follow through, and weakness is starting to kind of build into it. So this is indicating to us that we're probably going to get a consolidation or a small reversal into a bullish trend here in the next hour. What you're going to want to look for is these sort of a consolidation or a wedge forming between these two moving averages. So basically the way, and sometimes people ask, okay, so why, do wedges work? Ascending wedges, falling wedges, consolidation zones, trend lines, and all that stuff. You'll get some big hoity-toity trailers saying that, hey, this is all fugazi, and it's just people drawing charts, lines on a chart. There is a reason why things consolidate, why things create wedges. It's behavioral, and it's physics, and it's all of those things. And the reality is, if you apply physics, right, and I will say this about everything, something that is in motion will tend to stay in motion, right? Something at rest will tend to stay in rest, and there's an equal or opposite force acts against it. And that happens in the stock market. And the reason why you end up getting these wedge patterns, and why moving averages, create dynamic ranges, and why you can see an ascending wedge or a trailing wedge, is because people get out before it hits support, right? So in this particular situation, we had a downward trend, and you got a free fall, and then people start to sell, moves back up, free fall, and you get these legs, because in this situation, when you get a reversal, this is going to cause your wedge to happen. You've got selling off, you've got buying, you've got right here selling off before it gets to the next upper high, and a reversal. And so people will tend to take their trade off before it gets to the hard stop or the hard level, which creates a new low or a new high. So it'll continue to kind of bounce, and people will continue to kind of take profit before everybody else is going to take profit, which creates selling and buying pressure that's before the moving average or before the line, and it creates a wedge. So the reason why a wedge forms is because people will remove their trade, take their profits before they think it's going to hit that final target and take some stuff off the table, or they'll start peeling off contracts. So you might have a 10 position size, you start hitting a soft target, you peel off 4, hit another soft target, you peel off 4 more, you're left with 2 contracts, and you let those ride to the support, and when it hits that support, you peel that off, and it creates a range. So the selling pressure will get tighter and tighter, or harder and harder, and that creates your wedge. So if you're curious as to why wedges form, yeah, exactly, inertia. There we go. Yeah, and physics is where it's at. So Marius, I'm thinking about what's the other equation? I love it. I'm gonna put it on a sweatshirt or a hat, and it's force. Force is equal to mass times acceleration, right? Same thing in the stock market, right? You got mass. Whoa, internal temp. Hang on. I just lost my camera because the camera got too hot. That's no bueno. All right, so hey, I'm going to go ahead and end the stream here. If you can still hear me, hopefully. I'm just going to end it here because I just lost my camera. It says that the internal temp is too hot. It shut itself down, and that is on my Sony a7 III. So if you know why that happened or how I can fix it, I've got it hooked up to a battery pack. Sorry for the tech failure, but that's the end of this stream. Man. All right, anyway, yeah, I'll see you guys on the next side, maybe at 3 p.m. I'll hop back on here after I'm done running around, doing what I need to do. Ending the stream at 151. I'm happy with that, and I hope you guys do well today. Good luck in the markets, and I'll see you on the